I'm Dan Lewkowicz, and you're listening to The Passive Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, ladies and gentlemen. I am excited because I'm with Dan Lewkowicz today. Dan Lewkowicz is a seasoned real estate veteran with over 15 years of experience in many facets of the real estate industry. Before joining Encore Real Estate Investment Services, Dan was a senior advisor at Fortis Net Lease, specializing in commercial real estate investment sales. Dan is also a former business development executive for Amazon in Detroit, Michigan. Currently, Dan is Director of Investment Sales at Encore Real Estate Investment Services and specializes in shopping centers, medical office buildings, industrial fulfillment centers, quick service restaurants, automotive, repair, and parts stores. Of lesser known facets, Dan possesses industry-leading knowledge on cannabis cultivation and its impact on the economy in general, and industrial commercial real estate specifically, an expert on multifamily and the current economic undercurrents facing this asset class in today's post-COVID world. Dan often expresses the incredible opportunities for investors of all sizes. Welcome to the show, Dan.
Yeah, thanks so much. Thanks for having me. I really appreciate it.
No worries, no worries. Before we get started, I also want to say, Dan has 4 lovely children and resides in Oak Park, Michigan with his fiance Brady, and enjoys running, lifting weights, yoga, and playing the acoustic guitar. And I did want to mention the acoustic guitar because another guest of the show from Texas, he also plays. So Dan, tell us how you got into what you do.
Yeah, so initially the way that I got into real estate is that back in 2005, I started a company with a very close friend of mine called Disability Made Easy, which was a barrier-free home modification company. And I ran the sales and marketing for the company, but I was quite fascinated because I would go on some of our projects to bid out the jobs with the project manager, and I would watch him come up to this home that was, maybe it was functionally obsolete or it had some issues. And he would sit there with his graph paper and his pen and paper. And in 90 seconds, he was able to sketch something out and take something that really didn't suit its purpose and turn it into something that was wonderful, purposely built and intentional. And that really stuck in my mind, that idea of being able to take something and turn it into something that's useful. And, during the recession, I ended up purchasing my first home. And I noticed that I could buy something that was, ready to go, 100% move-in ready, or I could buy something, just down the street that was bank owned, vacant for, maybe 5 or 10 years. And once I was all in, I would have a built-in equity. So purchased my first home and renovated it. I told everybody that I hired out all the different trades. And I told everybody, I'm going to pay you a little bit more, but I'm going to be annoying and ask you all these questions so that I can learn. And, my friends used to joke with me and say, Dan, what are you going to do when you're done renovating this house? And I would tell them, I'll just buy another one. And that's exactly what I did. I bought another one and another one and another one and another one. And pretty quickly, I created a whole company that was devoted to the purchase, renovation, and resale of single family homes in and around the city of Detroit. So that's really how I got my start.
Yeah. Were you flipping these homes or were you BRRRR strategy?
No, they were primarily being flipped. I did hold on to some of them, but they were primarily being flipped. And at a certain point, you had mentioned, I was a business development executive for Amazon. And at that point, I had moved my company from the metropolitan area into the city of Detroit, because there's a little known fact that the city of Detroit at the time was about 7 years behind the rest of the nation in terms of foreclosure crisis. So while the prices were really getting high and inventory was drying up in the suburbs, I was able to move my company into Detroit and capitalize on what I had done earlier in the recession, in later years. And when I did that, I remember, I'll never forget the moment that I left Amazon and left my W-2. It was a really liberating moment. But I remember saying to myself, how many homes do I need to purchase in order to replace my income, through the BRRRR strategy? And the answer was 20. So I went out and I raised the capital, syndicated a bunch of deals, raised a lot of money, bought the properties, renovated them. And then I said to myself, there's a market for investors who actually want these properties turnkey. So I kind of morphed my business a little bit. And what we started doing was buying the properties, and it's incredible what you could buy a property for in the city of Detroit, renovate it, put a tenant in it or not, and then sell it to an investor. So really that's kind of the direction that the company took. And that was before I got into net lease brokerage, which is where I spend my primary time now.
Awesome. So you were literally setting up investors with turnkey investments. I love that.
Yes.
So let's focus on where you are now, right? So
Sure.
You also do some fulfillment centers?
Yeah, so I'm a net lease broker, which means that I specialize in properties that are cash flowing, that are typically rented to large national tenants. A big part of my business is quick service restaurant. I just got another Wendy's listing today. I put one under contract over the weekend. 2 weeks ago, I sold one. Last month, I sold another one. So we do a lot of quick service restaurant. We do a lot of pharmacy deals, Walgreens, Rite Aid, CVS. We also do a lot of fulfillment centers, a lot of industrial product like FedExes, like Amazon distribution centers, things of that like, and as well as like automotive parts stores like Tire Kingdom, Big O Tires, National Tire and Battery, things like that. And also shopping centers. That's the gamut of the asset classes that we specialize in.
So as an investor, what is my reason for selling one of those buildings or franchises or whatever it is, triple net lease, like you said, it was a Wendy's or even a last mile fulfillment center? What is my reason for that? And I want you to answer it the other way as well.
Sure.
Why would I purchase one?
Sure. So I'll answer in that order. The reason for wanting to sell today is that cap rates are at all-time lows. So prices are at all-time highs. So really, the fact that cap rates are so low and the fact that the industry is so hot and on fire, and there's a lot of uncertainty too. Like we don't really know what's going to happen with potential tax reform, with the 1031 exchange, with ordinary income tax replacing capital gains taxes. So, right now is the absolute height of the market. Interest rates are still, even though today interest rates, the 10-year treasury bill is 3 times as high as it was at its lowest during the pandemic, it's still lower than it was pre-COVID. And historically, it's about half of what it usually is. So, that's keeping cap rates very, very low. So it's really top of the market right now. There's also very little quality inventory on the market. So for example, I listed a Wendy's property 2 weeks ago. We had 8 offers in the first day, 4 of them at or above asking price. The deal that I put under contract this weekend, the buyer is waiving due diligence. They're doing a 21-day closing period from purchase agreement to close. And they're putting up a $200,000 non-refundable earnest money deposit day one. So that just shows you how hot the market is and how in how much demand there is for quality inventory. So that's why I would say that now is a great time to sell. In terms of why net lease now in terms of investing, the answer is that it's an incredibly stable and secure and solid investment. It's also very passive, incredibly hands-off. Most of the assets that we deal with are absolute triple net assets, which means that the landlord is responsible for nothing. The rent that they collect is net to them. The tenant pays for the taxes, the tenant pays for the insurance, the tenant pays for common area maintenance, for roof, for structure, for anything that happens with that property. So the landlord really is a coupon clipper, a coupon collector. It's really the definition of mailbox money.
No, I love that, because from what I understand is McDonald's is in the business of real estate, and everybody usually thinks it's burgers and fries, but they really purchase the real estate, and then that's how they franchise it out. That's what their business is modeled after. They want the land, and then they franchise the rest. I love that you are putting people, basically you did the model with turnkey investments, and then you moved it over into basically, here, you can, own this building that a franchise is in. I love that. I love that. So let's transition into the last mile and fulfillment centers.
Yeah.
It's funny that you still got your hand in Amazon, right?
Yeah. Yeah. Yeah.
So yeah, I learned about the last mile concept a while ago. Now, where are these locations, and what are you looking for when you are determining if this place could be positioned or even repositioned into a last mile?
Yeah, so this is a topic I'm very passionate about. So traditionally, the way that industrial fulfillment works is, like, if you look at a typical fulfillment center, like an Amazon fulfillment center, for example, typically they're 1 million square feet plus, which is huge, and they're located adjacent to a major national, international airport. So what's happening though, over time, is that we're seeing that these fulfillment centers, that the supply chain is moving closer to the consumer, because typically everyone was okay with, Amazon Prime style 2-day delivery. Well, that's really changing. I believe that we're going to see the advent of more things like, same day grocery services or same hour, items being fulfilled. So what's happening is those distribution hubs are coming closer and closer to the large population centers. And, if you look at, I always like to follow the money. Right, John? So basically, if I look at what's going on, even pre-pandemic, the pandemic is a whole nother story, but pre-pandemic, the Blackstone, which is a huge, institution everybody's familiar with, most people are familiar with, they made the largest industrial-only acquisition. It was a portfolio of $19.6 billion, and it was comprised primarily of last-mile fulfillment centers and cold storage. Cold storage is an industrial center that is refrigerated. And one of the things that's great about cold storage facilities is that the tenant improvements are so expensive that the likelihood of the tenant moving is pretty low. And in addition, last mile fulfillment is also strong and stable, because by definition, you cannot replace that real estate. The tenant can't move 5 miles away. That's not called last mile fulfillment anymore. So, we're seeing a big change, a big movement of that industrial model. That fulfillment center is moving closer and closer to the consumer as the demand for product heats up and as e-commerce continues to increase year over year. Now, 2 interesting statistics I want to share with you. Number one, this just will show you where the demand is for industrial right now. Number one, if you look at 2019 versus 2020, 2019 was a stellar year for industrial. But in 2020, there was a 27% increase in the number of square feet of new leases signed for industrial property, 27% in 1 year. Now let's fast forward that. CBRE just came out with some incredible statistics. There are 31 markets in the United States that are poised to see rental growth, right? Rent per square foot growth of 25% or more over the next 5 years. So if you look at cap rates, they're going down, and price is merely a function of net operating income and cap rate. So if the cap rate is going down and the rent per square foot is going to increase by 25, 30, 35, 40% in all these major markets, prices are going to go through the roof. So I'm very, very excited about the industrial space. And if somebody wants to get into net lease and wants appreciation, that's a space that they should certainly take a look at.
Basically led right into my next question is, what is the ideal investor that you come across for you as someone that's looking to make an investment like this? I just want a coupon clip.
Okay, so you're asking me, what is the ideal investor profile for me as a broker? What do you mean exactly?
Yeah, absolutely. As a broker, what is that investor profile fit?
So yeah, I work on both sides of the deal. I'm a listing broker. I'm hungry. I love listing product. And then I love working with the market and meeting new buyers and then representing them as well and helping them as well. But, the ideal investor for me, there's got to be two profiles, right? Because there's the buyer and the seller. The ideal seller is someone who is educated or at least willing to be educated, someone who is realistic, someone who is responsive, right? And someone who is serious. I've had clients before who are not serious, and there's nothing worse for a broker than working with a client who's not serious, because it's just an energy drain all around for everybody. So on the other hand, what I am looking for is someone who's serious, who's educated or willing to be educated, and someone who is realistic, right? They're realistic with the market. I've got a deal, for example, that I got today where the investor wanted me to list the property at 150 basis points below what I think it's worth. And I said to them, I said, look, I'm not willing to do it because it's a waste of your time. It's a waste of my time. And I educated this investor. I showed her other listings of mine that were similar and others that were different. And in the end of the day, we came to a compromise that was much closer to my proposed listing price. That's a great client. Now on the buyer side, it's going to be very similar. I want somebody who's serious and well qualified and someone who's not going to waste anyone's time, right? I want someone who knows what they want and is willing to perform. That is probably the most important thing, is that the buyer is serious and that they're willing to perform. Because as a broker, I'm representing my sellers, and it's my duty to vet the buyers and bring them the best possible buyer, keeping in mind that the best possible buyer is not always the buyer who's willing to pay the most, okay? Because there are other factors that are very important to sellers, especially in today's market.
I love it. I love it. I love it. So let's transition into your company side. Now, what are the type of assets you are mainly focused on today? I know we touched on in your bio, multifamily, fulfillment centers, and everything else. What are you really focused on when you are acquiring?
So primarily now, my main capacity is as a broker. So I'll partner with other large syndicators, and we do things like, for example, portfolios of single and multi-tenant residential properties in and around the city of Detroit, putting together, large syndications and portfolios, providing investors very strong returns. I'm still very passionate about Detroit. I think it's a great city. I think there's a ton of opportunity. And I've also helped some of my colleagues and converted them to show them the potential in the net lease space. So the same idea, but in the net lease space, it allows them to scale so much greater, so much quicker. So right now I'm putting together some syndications with some pharmacy deals, right? With some Walgreens and Rite Aid and CVS pharmacy deals that have at least 7 years plus left on the term, so that we can raise capital, put together a fund, and then place high quality credit tenant assets into the fund. And then after that, lever it, right, with 25 or 30-year amortization to do the best so that we can increase our cash on cash return. And I'm hopeful to do the same thing with industrial products in the near future.
You said a couple buzzwords that really I love. The fun. You're creating a fund. I love it. That's what we do here. And I really enjoy when I hear other people doing funds as a model for investors. Now, sure. That's awesome. And you mentioned Detroit. Didn't Dan Gilbert go down and purchase like the whole downtown and repurpose it?
He's incredible. I mean, the first thing that he did that really, and this was years ago, is that he brought his companies into the city of Detroit. I think collectively he has something like 20,000 or 22,000 employees that are working for him in the city of Detroit. So what that did was that created people that needed to do three things, right? They needed to live, work, and play in the city. And really, I think that that was the catalyst, and really that got the ball rolling for great places to live, great places to work, and great places to dine and play and entertain. So really, the city has come a long way, in the last 10 years. And I would say that if anyone is responsible for it, if we can put the blame, so to speak, on one person, it's definitely Dan Gilbert.
I mean, he went in at the right time. He bought low too, and he just repurposed the whole area. And that sounds like, to me, and I know you're familiar with it, forced appreciation.
Yes, yeah. Absolutely.
No, I love that. Thanks for going down that road with me.
So, and we do the same thing in the net lease space. We force appreciation by doing what's called, this is a cool concept, it's called a blend and extend. And what that is it's where we have an asset that has a short-term lease remaining, because one of the primary drivers of price is the amount of term remaining on the lease. Because as you can imagine, the longer the term on the lease, right, the more stability, the more guarantee there is. So the higher the price. So I'll give you a perfect example. I've got a client with a Walgreens property in Ohio that had $290,000 of annual rent, right? Absolute triple net, no landlord responsibilities. However, there was only 14 months left on the lease. So $290,000, I like numbers. I think this really shows people to really illustrate your point of forced appreciation. So at the time that it had $290,000 of rent, only 14 months left on the lease, it was worth approximately a 9 cap. So that'd be like $3.22 million, $3,222,000, let's say. So what we ended up doing was negotiating with the tenant with Walgreens to lower the rent, right? Which you would think that if the rent is lower, the asset is going to be worth less, but it's not. I'll show you why. They agreed to lower the rent all the way down to $225,000 in exchange for a brand new 10-year lease. But what that did was that lowered the cap rate from a 9 cap all the way to about a 5.75 cap. So now the property, even though it's bringing in $65,000 less of annual income, it's worth $3.913 million. So we're talking about almost a $700,000 increase in forced appreciation merely by a lease negotiation.
That's cap rate gymnastics right there. I love it. I love it. Dan, we can go on, and we probably got to bring you back to talk about more about this triple net. And I noticed that a lot of people go from residential, multifamily to that commercial in the form of either multifamily or triple net. So I appreciate you coming on. What's one piece of advice for the PI listeners?
Yeah, one piece of advice, and I have a show as well, so I get to hear a lot of really highly successful people echo the same advice that I'm going to say, and that is take massive action. Okay, that if there's one thing that you can do, is to take massive action, because most things in life are a numbers game, right? I don't think I'd give you this advice for like dating or marriage, but like when it comes to business and investing, take massive action. If you're a broker and you can make 500 calls, make 5,000 calls. If you're an investor and you're going to underwrite deals, instead of underwriting 50 deals, underwrite 500 deals, right? The more action that you take, the more results that you'll get. I think that's incredibly important. And the other thing that I'll say is make sure that you have a great mentor and great educational sources, right? Podcasts like this, right? Courses, anything you can get your hands on to learn. So educate yourself, have a mentor, and take massive action.
No, I love that. I buy courses all the time. I buy courses on stuff that I'm really interested in because I think it's, someone's learned the shortcut to do something right.
Yep.
And they're going to teach me. I don't care about shelling out $100 or so to buy that course.
Exactly.
I mean, it's worth it. Dan, how can we stay in touch with you?
You can find me on LinkedIn, Dan Lewkowicz, Lewkowicz. You can also reach out to me. I'll give you my cell phone number. It's 248-943-2838. Again, 248-943-2838. If you have property, you want to know what it's worth, if you want to buy property, if you just want to talk shop in real estate, please reach out. If you're interested in commercial real estate, speaking of courses, we just launched our own course last Friday called the CRE Pro Course. You can check it out at www.creprocourse.com. And if there's anything I can do to add value or help, I'm always happy to do so.
Thanks for coming on. And I got one question left. It's my favorite question. What is the meaning behind your company name?
What is the meaning behind? So my personal, let me take it both ways. So my personal company that does, the real estate investment is called Renaissance Real Estate Ventures. Okay. Renaissance Real Estate Ventures. The acronym is RENREV, like REV, Real Estate Ventures. REV is like the Motor City. And the Renaissance, you'll like this, I know. The Renaissance, Detroit is the Renaissance city, right? That's what we know. But I believe we have our shirts and our hoodies, they say a tagline of the Renaissance is within. Because I really believe that every single individual has an opportunity to undergo a personal renaissance. And that's the most important renaissance. So that's really the meaning behind our company.
I love it. I love it. Dan, thank you for stopping by the show today. We really enjoyed the conversation. And it's a pleasure, man. Thank you
so much.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, If this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.